Let's talk about the markets in a few minutes, and we'll linger a little on this higher yield story because, as you say, it was the yield channel, the better data that led to expectations of the Fed and other central banks going higher, pushes yields higher, weighs on stocks. That was the thinking in yesterday's session. More on this as we go through the programme, no doubt. But how does that sit alongside the fact that we saw some pretty weak forecasts coming in from retailers? How can we be so pleasantly surprised, or at least get upside surprises on services in the US economy and elsewhere, and then US retailers give us such gloomy outlooks?
Yeah, it is an amazing kind of contradiction. I think, a lot of these outlooks were for the rest of the year. And these PMIs, remember how they work, is how do you kind of consider your situation compared to the prior month? It is much more short-term, much more high frequency, which is why we like it. It's kind of more powerful and telling in the immediate. Those PMIs are saying, hey, it's looking good for the next few weeks, possibly next couple of months. It's not saying we're going to be in a wonderful place in June. And I think it's important to emphasize, this PMI say, hey, look, the economy's still strong. The Fed still needs to do more. It does not rule out, for example, a recession suddenly starting harshly by June or July this year.
OK, so that's the interesting stuff behind the data then, and rightly pointing out the details of what it is that the PMI tells us and doesn't. What about the minutes? We're going to get Fed minutes a little bit later on. Are they going to be echoing some of the things we'd heard weeks ago from the Fed, or are they going to be? They're not going to be really up to date, are they? Reflecting the latest strength of data that we've seen coming out of the US. So how much will the market care?
They should be very, very dovish. I think people got very excited by Bullard and Mester talking about 50 basis points. They're not voting members. That was post-meeting, post some other data. I just don't think it's relevant. I think that it'll be very clear the consensus is, hey, we needed 25 basis points, talking about a pause. I think they'll be very, very dovish. Now, the disclaimer to that, and why that may not provide too much respite for those who are still clinging on to long bond positions, is the fact that it is very dated. We've had a lot of data since then on both the growth and the inflation side that kind of suggest, hey, wait a sec, the Fed cannot afford to relax on inflation just yet, and they need to hike further. So it is very, very dated, and I think that people discounted. So what I'm trying to work out is where are expectations for the market in terms that everyone knows is going to be dovish, and how much do they care and just ignore them entirely?
And we're always looking around for clues from one central bank and how much they apply to others. Interesting, with that in mind, to look at what the RBNZ did overnight then, Mark. Hiking by 50 basis points. Many had expected that to happen, of course. But they are forecasting a clear recession in the middle of the year. We've seen the Bank of England hiking whilst predicting a recession. It does seem as if global central banks are at least prepared to hike into what they see as weakness.
Yeah, look, I think the RBNZ one is actually more important in the UK, not only because they tend to be a global leader in this idea, but they're talking about a very sharp and deep recession coming through starting in the second quarter. And they're also talking about rates going significantly higher still, and they're much farther ahead in the Bank of England. So I think that this will be a theme that central banks are going to keep on saying, as they said for the past year, we're going to hike rates even though we're getting a recession because inflation's not under control.
OK, we'll keep our focus on that then. Mark, thank you for thoughts so far. And you can get up-to-date analysis and insight from Mark and all of the other members of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal.